TCS came out with good set of numbers, pretty much in line with street expectations. The revenue came at 1% growth on a constant currency level in Q3 for them. The ground situation continues to be stable as per Kriti. They continue to say that demand is still little cautious on the demand front, and they don't know when and which quarter demand is expected to pick up from there. The markets are volatile, and despite this headwind, they've been able to get a TCV or total contract value of $8.1 billion, half of which is coming from the US markets. TCS has been guiding around $9 to $11 billion of TCV in the second quarter. It's a bit tad lower than that, but given the kind of headwinds, they're saying that this is a good TCV coming in for them. And these entire contracts which have come in FY24, they have already started performing, and they've been yielding revenues. They continue to reiterate that some of the orders from FY20 to 22 is where the trouble is, where the orders have either been stalled or reprioritized, or there have been a change in technology platform, and so the priorities or the returns for the clients have come down, and so they have gone back on some of the orders there. UK continues to be good performing market for them, though Europe is weak. The CEO NG Subramaniam says that they're seeing some kind of green shoots coming in that market. BFSI, though it was a degrowth quarter for them, it continues to be they continue to get orders from the BFSI. They expect BFSI to pick up once some kind of US recovery is seen in that market there. Margin was a surprise for the street, 70 bips up in Q3 to 25%. This is on the back of another 101 basis points up in Q2. They have this aspiration margin level of 26 to 28%, and 25% is a good set coming in Q3 for them, and that would be a positive for the street going forward. This is primarily led by reduction in subcontracting costs and some of the forex gains that they got during the quarter. On the employee front, attrition continues to be 13.3% on a trailing 12-month basis. On a net employee contraction, 5,600 is what they saw in Q3. The CHRO, Milind, he spoke about the fact that there is going to be further contraction happening on a similar level in the next few quarters, and they expect that to happen because they onboarded a lot of employees in the last 2 to 3 years, and there will be some normalization that's going to happen. Though he did not mention the kind of hiring that he expects in FY25, they said they continue to hire on a lateral front, and the hiring onboarding of freshers will be slow going into FY25, but by the end of March 25, it would be at the similar level as FY24. There's some of the big projects which they've been telling is deployment of some of the AI projects, especially generative AI. 4 of them have moved from proof of concept to deployment. They have trained over 167,000 employees on generative AI, or 14,000 on advanced AI, and they're hoping that it could take 3 to 4 quarters before you see sizable amount of orders coming from this kind of product going forward. So overall, a cautious outlook coming in from TCS. Numbers on a top line almost in line with street, and margins was a surprise for the street.